Hello and welcome dear traders and investors. I'm glad to present you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin rallied by roughly 2,000 USD overnight. And the catalyst behind the move is fairly obvious. During the night, Donald Trump announced that an agreement had been reached with Iran and that the Strait of Hormuz would be reopened. While Tehran has yet to officially confirm those claims, the headlines were enough to trigger a risk-on reaction across financial markets. The US dollar weakened during the session, while the euro and the British pound moved higher. Bitcoin followed the same pattern, benefiting from improving risk sentiment and reduced geopolitical concerns. That said, it's important to keep the move in perspective. Bitcoin had already begun a corrective rebound about a week ago, meaning the current recovery was underway even before the latest geopolitical developments. The positive headlines may have accelerated the bounce, but they are unlikely to be the sole reason behind it. We still do not believe that an end to the Middle East conflict or the reopening of the Strait of Hormuz is enough to trigger a new long-term bullish trend in Bitcoin. Those developments can support risk assets in the short term, but they do not fundamentally change the broader technical picture. For now, the market remains in a corrective phase within a larger bearish structure. A much more meaningful signal would be the invalidation of the major bearish fair value gap on daily timeframe. If that supply zone is successfully reclaimed, the odds of a stronger recovery would increase substantially. Even then, however, we would view it as a powerful rally rather than the beginning of a new bull market. At this stage, the burden of proof remains on the bulls. The current bounce looks constructive, but it has yet to alter the dominant trend. On the daily timeframe, Bitcoin has resumed building a bearish market structure. The trend remains firmly the downside. And the charge level has been moved up to 82,800 USD, following the formation of a fresh lower low. Until BTC reclaims and holds above the 82,800 USD, the current downtrend remains intact. Only a sustained break above would invalidate the bearish structure and suggest that the broader decline has come to an end. At the moment, however, there are still no technical signs of a bullish reversal. Momentum remains skewed to the downside, and we continue to expect further weakness in Bitcoin. A new bearish fair value gap has formed on the daily chart between 68,000 and 70,700 USD. While several smaller imbalances can be identified throughout the current sell-off, there is the most obvious and technically significant supply zone on the chart. As a result, any future retracement into this area could attack fresh selling pressure and generate new short entry opportunities. As long as Bitcoin remains below key structural resistance, rallies into bearish FVGs should be viewed as potential setups for trend continuation rather than signs of a market recovery. On the 4-hour timeframe, Bitcoin has finally started to show signs of a corrective bounce after weeks of persistent selling pressure. The CHOCH level that continues to validate the broader bearish trend remains at 78k, while the CHOCH support in the current bullish correction is located at 60,765 USD. Traders can still use bearish setups to initiate now short positions, but the daily timeframe remains the preferred chart for trading in the direction of the dominant trend. It provides clearer structure and higher probability continuation signals. As for long positions, they can be considered when valid bullish patterns emerge on the 4-hour chart. However, traders should keep expectations realistic. The market is still operating within a larger bearish trend, which significantly limits the upside potential of any recovery. For now, bullish setups are better viewed as short-term counter-trend opportunities rather than the start of the major reversal. In other words, tactical longs may be justified, but expectations should be limited to modest gains and shorter holding periods until the higher timeframe trend begins to shift. On the daily timeframe, Ethereum remains firmly locked in a bearish trend structure. The key CHOCH level is now located at 2477, marking the latest lower high within the current downtrend. As long as Ethereum continues trading below that level, the broader bearish bias remains intact, and there is no technical basis for calling a trend reversal. Price recently reacted with only a minor deviation to the latest bearish fair value gap, a setup that closely mirrored the signal seen on Bitcoin. The alignment between the two largest cryptocurrencies provided additional confirmation that sellers remained in control. As a result, traders had a strong technical case for initiating short positions ahead of the most recent sell-off. The rejection from the bearish FEG combined with the intact bearish market structure offered a high probability continuation setup that ultimately played out as expected. For now, Ethereum continues to trade below key structural resistance, and the daily chart remains titled in favor of the bears until proven otherwise. On the 4-hour timeframe, Ethereum continues to trade within a bearish structure, which remains part of the broader downtrend visible on both the daily and weekly charts. At the moment, the market is showing only a modest corrective rebound. And while that recovery could extend further, there is still little evidence of a meaningful shift in trend. The most recent bullish fair value gap did generate a reaction, but as the price action shows, the bounce has been relatively weak. That's a classic characteristics of a bearish market: sharp declines by followed sluggish and limited recoveries. In other words, sellers continue to dominate the broader picture, while buyers have so far failed to generate enough momentum to challenge key resistance levels. As a result, traders may consider tactical long positions when fresh bullish patterns or setups emerge on the 4-hour chart. However, these trades should be viewed as short-term counter-trend opportunities rather than the beginning of a larger bullish move. The prevailing trend remains bearish, and Ethereum could resume its decline at any time as long as the higher timeframe structure stays intact. Until the market starts producing stronger bullish signals and reclaiming key structural levels, rallies are likely to be treated as corrective moves within a broader downtrend. That's all for today. See you online soon, and good luck.